Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Now before we get into the technical analysis, we do got CPI tomorrow guys, 8:30 a.m. Eastern time. Okay, we had a very choppy day today. It was crap trading. Well, it wasn't crap trading, but you know, choppy price action. But with CPI tomorrow, I doubt we're gonna have some choppy price action tomorrow. We might get a trending day, but will it be up? Will it be down? I got Market Watch right here. PPI came out this morning. We was expecting a 0.2% increase. That was the expectation month over month, but we actually got a 0.4% increase. So inflation is increasing on the sellers, on the producers. All right, we got CPI tomorrow. That's for the consumers. That's for the buyers. All right, we are expecting a 0.3% increase for tomorrow. So the way I'm gonna interpret it, if the actual data comes out higher than 0.3%, I would say that's bearish. If it comes in lower than 0.3%, I would say that might be bullish. If it comes right at expectation, flip a coin, but it might be bullish because it's not as bad as they thought they were. Okay, overall it's not, you know, good, but you know, the market does what the market does. Okay, so above more than 0.3%, that could be bearish. Below 0.3%, that could be bullish. But that's fundamentals. Okay, if you could even call it that. But this is a technical analysis video. Okay, so let's get into it. So right here, what we got is the 15-minute candle. As you guys can see, it's chopping, and we had a very choppy day. The price was basing. Remember, basing is this choppy price action, consolidation. It can come in the form of triangles, bull flags, bear flags, channels, or it can just come in a textbook pullback. Okay, depending on the trend. Okay, in this case, we got a triangle pattern. It broke down the triangle pattern at the end of the day. Okay, the chop range was 357. That's the September 30th low, and I was watching the 200-week moving average at 359.16. Of course, I had a resistance level at 360 as well, and we chopped within that range. You know, this is what happens in the market. It phases between two cycles. Okay, one, it's either trending in the trend phase, where it's moving in one direction, either up or down, or it gets into a phase where it's chopping, it's consolidating to build strength for the next move, the next direction of move. They lead to each other, okay? So I'm hoping with all this chop that we've had, I'm hoping it leads to a trend day tomorrow, okay? So go on the daily chart. One thing we notice on the daily chart, we got an inverted hammer candle. We got the close below 357 level. We put in a new lower low on, you know, for the year at 355.71, excuse me. But you know, we didn't actually close below 357. We got the close. So just based on technical analysis, that is bearish. That is a bearish close, which, you know, if you're a swing trader, based on previous price action, every time we broke critical support down, it usually led to more downside, okay? So with this loss of 357, I would assume we get more downside. We can possibly break 355.7. I got a level around 353-ish, which is the 50-month moving average. And I got a big level around 349.12. It's the 350 zone. I'm going to give it a zone. But 349 is based on the fib level for March 2020 low to January 2022 high, which is the 50% retracement level. Very critical level, okay? But the thing is, with CPI tomorrow, it's kind of, you got to take technical analysis with a grain of salt, all right? Because we don't know what's going to happen, all right? But if CPI comes out lower than expected and the market reacts bullish, the levels we need to watch out for obviously is at 357. Above 357 would give us that false breakdown setup. You know, I always talk about the setups, and we need to recapture that 200-week moving average, which is at 359.16. All right, we need to recapture. Give us that false breakdown setup, SPY. Okay, if you're a bull, that is. If you're a bull, you want those false breakdown setups put momentum on your side, okay? Give you those high probable trades, okay? So above 357, above 359.16, recapture the 200-week moving average. That should put 362 to 363 zone in play. That was around the June low, and maybe we could trigger more upside. 364.5, 367, got 368, and then the multi-year trend line now is at 370. Oh, is that, yeah, about 370.3 ish now. Okay, so like I always say, you're bullish, you want to see some bullish price action, you need that false breakdown setup, because we are in the bear market. So we need some resistant levels or previous support levels to recapture. Okay, guys. And of course, the bearish scenario, if CPI comes out higher than expected, bears need to hold these two critical resistance levels. They need to hold 357. They need to hold that 200-week moving average. Okay, you guys go back and check 2008 bear market. You go back and check 2001 bear market. The loss of the 200-week moving average is extremely, extremely bearish and leads to a lot further downside. Go back and check. Okay, do your own due diligence with that. Okay, you will see. Best 2008, we lost that 200-week moving average. It triggered massive downside. Okay, and right now we officially got two closes below that 200-week moving average. Okay, that's not a good sign. All right, keep in mind the 200-week moving average is a weekly moving average, so it matters more. It'll matter more by Friday at the end of the week. Okay, bulls still do have an opportunity to have 2 trading days left to recapture that level. But we'll see what happens. If bulls gonna do this, they're gonna need some catalyst. They're gonna need some help, some fundamental help. All right, for tomorrow with CPI. Okay, data needs to come in as expected or less than expected. Okay, all right. Other than that, Uncle's still bearish. All right, price action is still bearish. You can see it with the triple Q as well. We have an inside day candle on the triple Q, but it did give us a second close. I had a resistant level around 264. That's 2 closes below 264. It tested that 261.5 to 262 zone. Got a support there. If that fails, I got a target around 260, but my ultimate target now would be around 256 to 255.5 zone. Will be support of this down trend line, this blue down trend line of this channel that I got here. Okay, so like similar with SPY, we need to just clear some resistance levels to recapture 264, recapture 267, 269, 272.4, and the very critical level at 276. All right, just know the levels, know the setups, and just trade it unbiasedly. And Tesla, somebody poked Tesla. It's very oversold, I tell you that. Very oversold. Yesterday, we lost that 218.3 level that I got. Today, we back tested it as a resistance. Watched above it a little bit, but another day where we failed to close above that critical resistant level. Okay, so I can't get too bullish on Tesla, or at least for the short term, unless it clears a resistance. 218.3. I got one at 222. And 225 critical one up there. Okay, as long as below 218.3, my targets are which got hit today actually, but my targets are 216, 213.2, and 211ish. We did got as low as 211.5, so close enough. Okay, guys, those are the levels. I'm gonna end this with the option flow. Now, option flow pretty bearish, but we still got these big money contracts coming. 46.5 million, over 5,000 in size, 450 strike price. So, in the money puts, for December 16th, definitely got time. But this big money bet into the downside, guys. Okay, we can see more, 25.2 million, 10.7 million, 23 million. Wow. Like millions and millions. We can scroll down and we can see some more. Look at that, 70 million in the puts, 48.8 millions in the puts. They all got time on it. This one's a little more aggressive, 420 expiration date October 21st, so it's a little closer. They're all block orders. Block orders are not as aggressive as sweep orders. Like sweep orders, whoever's buying the sweep orders, they're just trying to get in quickly and as fast as they can. And more aggressive block orders, more predetermined, but they are from institution. They are from smart money. So smart money is still betting to the downside. Triple Q, you can see that with triple Q as well. If I scroll down some more, and yeah, Triple Q 88% in the puts, Tesla 72% in the puts. Yeah, you know, just overall bearish stuff here. Option flow. Okay, guys, so big money, it's still bearish on the market. Are you guys bearish on the market? Let me know in the comment section below. And if you want to support this channel, please consider joining, subscribing to my Substack. Keep the lights on, guys, and I give you my morning analysis. So, you know, I got to give you guys something for supporting the channel. And if you want the most content from Uncle Charters, come be a part of the family and join the Discord, okay? It'll mean a lot to Uncle. And just thank you guys so much for watching. Peace.